Hello, everybody, and welcome to my open house. I am Lisa Stafford, your property advocate. Today, I really wanted to talk to you about how interest rates are going to impact you. And today, I am joined by my expert in finance, Lisa Wilson from Finance in Hills. Hello, Lisa, how are you?
Good, thank you, Lisa, and thank you for having me, my expert in buyers and selling advocacy.
You're very welcome. It's great to have you join me on this at such short notice. But I thought it was a topic that we should probably talk about this week, seeing as though the RBA were kind enough to increase interest rates yesterday for us. So, what can you tell us about your interpretation of what that means for people that are in a situation where they need to buy or sell property?
So the RBA came out yesterday and increased rates by a further 0.5%. So that's taken their increases now to 1.2% in the last 3 months. So it's a big jump. And if you have an average mortgage of about $500,000, probably looking at about a $300 per month increase. So it's a slice out of the family budget and how to manage your household cash flow. Having said that, people who went into or have recently gone into a mortgage have been assessed on high interest rates. There's always that buffer in there. So when the bank assesses it, they always put on a 3% buffer onto that to make sure that when rates do go up, because we were in a historically low interest rate environment, that you can afford it. So
I guess the banks need to do that, don't they? Because they need to protect themselves. I mean, there's a risk there for them and they need to have that buffer for their own safety.
Correct. And banks are there to make money, but they're also there to make sure that they look after people, because they don't want to they need to pass the pub test. They don't want to have to repossess someone's house or put them into hardship unnecessarily. So they want to make sure that their book stays nice and clean, that there's minimal defaults and hardship, and they will work with a person or couple or homeowners or mortgage holders, I should say, to make sure that they get the best result rather than kicking them out of their house, because it doesn't pass the pub test.
And I love that analogy, passing the pub test. You all should have to do that test, I think, at some stage. So I guess, people that are currently got a mortgage and, they're feeling that pressure, what sort of advice could you give to them around, what their options are if they're feeling that financial pressure
Probably two different tacks, because I read an article today that said something about 40% of mortgage holders actually took out fixed loans when they were at their historically low rates, which is amazing, except for those 40% will run off in the next 1 to 2 years. So when they drop off, they're going to have these massive increases that they haven't prepared for. So for my fixed interest rate holders, I would be making sure that they increase their current home loan repayments now, not necessarily put them into your loan account though, because a lot of fixed products don't allow you to do that. But take that extra $200 or $300 a month that if you can afford it, and put it into an additional savings account. So when your fixed rate runs off, you've got a bit of a buffer there to warrant, to give you a bit of breathing space.
The old rainy day savings account. And so can you also fix in a certain amount and then, have the rest on a variable? Can you have that sort of product where you've got that option?
You could, if you were to do it now, you could. You've probably missed the boat. So as I said, banks are there to make money. So they've already lifted their fixed rates up significantly. So they're in your 4s to nearly 5% at the moment. And I would imagine that we'll have announcements from the big 4 banks probably in the next couple of days that say that they've risen another 0.5%. So they're going to be in your 5s fairly soon, I would imagine. So we may have missed the boat there in terms of fix, but you can hedge your bets and you can say, okay, well, let's fix part of it and let's do a variable part, and maybe we'll smash out that variable. We'll put extra repayments on there. We'll do it a fortnightly or a weekly payment, so you're getting that extra repayment each year. And as
they can as well, I guess, because the cost of living has not only the interest rates have gone up, but just the fuel prices are going to get a lettuce. It's crazy at the moment, so that's all having an impact on everyone too.
I know I felt a little bit lax today having a Caesar salad for lunch.
Where'd you get the cost from? I just could. So, Lisa, what about first home buyers? So people that haven't actually got into the property market yet, and they're looking, they may have been talking about getting a pre-approval or that sort of thing. Maybe run us through, what's the best advice for that sort of person?
Obviously, their individual circumstances do apply, but if you're sitting on the fence thinking we're going to wait for the fall in the market, the flip side to it is you can wait for the fall in the market that's predicted, which may not come, may come. We've seen some cooling in both Sydney and Melbourne markets in terms of property prices.
Yep.
But as you always tell me, there's markets within markets. So good properties will still sell. And we're in winter at the moment, so you would expect the prices are a little bit lower than usual and clearance rates aren't as high, et cetera, et cetera.
And that's always the way when there's, and I always say this, but I'll say it again, the one factor that will always have an impact on property prices is supply versus demand, okay?
Correct.
So if you've got very little supply, which is what we have experienced all the way through COVID and even now that it's winter, and people's uncertainty about, selling their property in this market, but there's still a demand, then, you'll get more competitive buyers looking at your property. Whereas if you've got a lot of supply, which often happens in springtime, and the demand doesn't reach that same level of demand, then that's when you start to see that balance across the board in property pricing. But good properties that are presented and prepared well and priced correctly will always get a great result. And, buyers, if they know what to look for, can always buy a property at the right price.
Going back to the first home buyer, so the flip side would be that you wait for the fall, which may or may not come, depending on, whatever happens in the near future. But we know that interest rates are going to continue to rise. The RBA has made it very clear that inflation is so high at the moment that we need to pare that back, and by doing that, they increase rates. We also know that historically that a reasonably well-oiled economy runs anywhere between 4 to 7% normally. So interest rates are going to get back into that bracket at some point. I mean, we haven't seen that since 2009, but it will happen. Yeah. So if you are a first home buyer and borrowing capacity is, an issue or a concern of yours, then getting into the market now may mean that you actually meet your borrowing capacity, where if you wait until prices fall but interest rates go up, that decreases your borrowing capacity because that buffer increases and your repayments are going to increase every time there's an interest rate increase. Yeah. So you've got to weigh up the two. Do you wait for the fall, which is, again, with a glass ball, or do you capitalise on the fact that your borrowing capacity is higher now to get you into the market?
And I think too, it's really important sometimes to focus on where we're at right now, because this is the one space that we're in and we've got control of what's happening in the market that we're in now. If you think too far ahead and start to plan for what might happen, then there's every possibility you might be wrong. So there's a bit of risk there as well. We've got control with what's going on right now.
And there's also time in market. So you find that if you are going to the market, buying and selling property is such an expensive thing to do that you don't go into it to stay in it for 1 or 2 years. You're in it for the long term. So once you're in property, you generally stay in property. So
it's about getting it right to start off with, isn't it?
You're going to weather the peaks and the troughs. So you may, buy in coming down a slide, but you're going to stay in it for 10, 15 years. You're going to end up still back up here.
It's like the stock market, isn't it? It's sort of, if you draw a line from start to finish, it's going up. The property market's pretty much the same. And yes, we do have this, but traditionally it's time in, not time in.
Yes.
Yes.
Some other ideas too for people on the variable rates to try and manage their cash flow at the moment, or to prepare themselves for these rate increases, is to actually increase their repayments that they're making. Whether they put it into their offset account, their redraw, or into the loan, it's up to them. It's obviously a personal choice. Increasing the frequency of your repayments. So if you're currently paying monthly, paring that back to fortnightly or weekly means that you're actually paying more per annum than you would if it was just 12 monthly payments. And the most important one would be to actually call your bank and say, hey, look, I have been with you for X amount of years. Our property's increased in value. We've paid off so much. We've never missed payments. We've got some good equity in there. We'd like you to review our interest rate. And worst case scenario, they say, sorry, no, And that's when you pick up the phone and you call a broker, and they will look to refinance you to another bank that will treat you like a new customer rather than charge you the loyalty tax.
Yeah. And speaking of like getting in touch with your bank or your broker, like anyone that is, I guess, feeling that stress of the interest rate rises and what's going on financially, that's always an option to reach out and contact your lender, contact your broker, and see if you can get a bit of help from the bank, because they're there to help you, aren't they?
Yeah. And obviously hardship, banks actually have hardship teams, and you would have seen throughout COVID and the pandemic that their numbers were advertised everywhere. It was very much contact us so we can help you in any way that we can. They will make money out of it. However, they will try and keep you in your home and take some of that stress off if they can. Occasionally you'll get a bit of a jerk on the phone if you call them. But for the most part, they're decent people on the other end that are trying to do the right thing. And by you calling them and getting in early, nipping it in the bud, they tend to be a lot more receptive than if you've let it go for too long.
Yeah. And I guess too, it's important to know what your options are there as well, so that you can make the right choices and some smart decisions in that. And I guess too, like, that first home buyer market, they've had pretty much the whole market to themselves throughout COVID, because all the investors kind of pulled out from, buying property, because
a great part of it, yes.
Yes. So, we're going to start to see, I would think, we're going to start to see some of those investors come back into the market. So that's going to increase that competition around that sort of first home buyer market and those types of properties.
Particularly with international people coming back into, once our borders open up freely. So usually, historically, Australia, we have about 220 to 330 people immigrate to Australia annually. Over COVID, that was zero. So those people, they may not necessarily be coming to Australia to buy homes, but they'll be looking for properties to live in. So they'll be looking in rentals, which will put further pressure on our rental market, which will mean that investors will come back in droves, you would imagine, to try and ping those properties so they can get those tenants to pay off their loans.
Yeah, no, absolutely. All right, Lisa, well, thank you so much again for joining me tonight. And look, for all those that have joined us tonight, thank you so much, because, we love bringing you these, snippets of information and advice, and we are here to help you. So if you've got any concerns or have any further questions, please feel free to reach out, leave a comment or get in touch. And, I can certainly put you in touch with Lisa. Thank you again. I will see you next time. I'm Lisa Stafford, and I'm your expert in property. And this is Lisa Wilson. And guess what? She's your expert in finance. Thanks, everybody.